Hey everybody, Brian from Bear Bull Traders here. It is Sunday, November the 18th. Just going to take a look at the week that was. Prior week here, price action. You can see I'm just going to look at the SPY. I'm not going to look at any other indexes to keep this video short, but the SPY pretty much behaved the same as a lot of the other indexes. So just look at that. You can see here we had a volatile week, 3 days down, 2 days up. We actually bounced on Thursday. We bounced off the place where we closed the gap. So you can kind of see here we had an up day back in end of October, gapped up, went higher, and then we filled this gap with this candle here, and then we came back down and filled this gap. So this is where it kind of bottomed out and then found some footing and went back up Thursday and Friday. Let's take a look at the weekly. You can kind of see here the weekly. It's been a little bit choppy actually when you look at 2016. We had a nice run here from early 16 to our September. Now we've got the 9 crossing over the 20, and sort of looks like we may be heading down or at the very least consolidating in this range. This is a pretty significant level of support in here. If we break that, it could mean quite a bit more downside. So, false breakout here. Personally, I don't think we're going to come back up and challenge this level, at least for a significant period of time. I think we're going to kind of be stuck in this range. There is a potential for things to head to the downside. There's a couple of strange things that are going on. When you look at the 200-day moving average of all the stocks on the indexes, 75% of them, according to FinViz, are trading below their 200-day moving average. That's quite an interesting statistic, given that where the market is. Like look at this, we've had a long bull run, and we're sitting pretty close to the highs on all the indexes, and we've got 75% of the stocks trading below their 200-day moving average. That's a real sort of, I'm going to call that an anomaly. You would not expect that with a chart that looks like this. So it tells you a little bit about the internals going on and how the indexes aren't really reflecting what's going on internally inside the market. There's some other, I would say, concerning signs for the bulls. You've got hedge funds. I saw a statistic that their hedge funds are moving a significant amount of their assets holdings into treasuries, which is a risk-off asset. They're taking their money out of the stock market and putting it on the sideline in treasuries. And you've got another indicator, the junk bonds, which is measured by the HYG, or at least that's one measure. The junk bonds are starting to move up in yield pricing, which means, again, people are concerned more about the risk assets, and they want more return for the risk. And so that's another indicator that people watch for coming recessions and stuff like that, when junk bonds yields really start going higher compared to the treasuries. So some concerning signs for, I would say, for the bulls. There's certainly lots of money moving to risk off assets as opposed to risk on, which would be the stock market. So let's take a look at that. Actually, you can kind of see that again in this performance that's FinViz site. You can kind of see here where the performance is and where people are moving their money. Utilities, basic materials, healthcare, consumer goods, staples, that kind of stuff, against consumers goods. So all these are risk off assets, especially the utilities. People are moving or at least funds are moving their assets into less risky assets. So again, it doesn't necessarily bode well for some of the higher beta plays we've had such a good run in the past, like technology and that kind of stuff. So just interesting backdrop as to what's going on in the marketplace right now. And we'll take a look at what some stocks I'm looking at right now. One play I'm looking at, and it's a very short-term play, is the OIH. You could also use the XLE, which is the Spider Energy ETF. I'm looking for a bounce because oil, as everybody knows, has sold off so hard over the last month or so, and I'm looking for a bounce here. And I'm just looking at the OIH, for example. It's trading. It traded down to 19, went out around 1925. On Monday, I'd be looking to try to get into this trade under 19 or around 19. If I can get in there, that gives me a nice, in my mind, gives me a nice risk reward. I'd stop out around 1875, and I'd hope for it to get to at least 20. So if I can get in at 19, that gives me roughly a 4-to-1 risk to reward ratio. So I think that's worth a play, and I'll look at that on Monday, see where oil's trading, and see if I can get a good entry on OIH. So that's one trade I am looking at for a swing trade. Now that would be for a couple days, a couple day trade bounce, even if it's just a bear flag, because I think we are still in as far as oil and energy goes, I still think we are in a bear market, and this is just for a bounce. So that's one stock, and then a couple of others I've got on my radar, and not necessarily going to enter them tomorrow or this week, but I'm going to watch for them for a pullback. Again, KO, a dividend stock. It's been really performing well when you look at the way the market's performed. Had a bit of a sell-off in that October sell-off, but then bounced right back, and then it's ripped higher since. So again, I almost think this is a safety play. Funds may be moving some of their money into things that have dividends. More consumer staples. If you could argue Coke is a staple, I don't know. It's people don't want to do without their junk food, so maybe it is a staple. But another one that's really performed well in this really volatile market has been Verizon. Verizon's really snuck up. You can kind of see here, October, it barely, even with that market sell-off, it barely dipped. And then it's been off to the races ever since, and a little bit of volatility there, but it's been strong. And hard to buy these on, this is a breakout, but hard to buy those. I'd be looking to get in on a pullback. Like hopefully we might get a pullback, and I might try to take an entry on those. But those are kind of, you always want to keep a list at your side of your desk of stocks that you'd like to buy in a pullback, and these would probably be two I would look at for sure. The other stocks I'm just going to mention quickly, the retailers, they look a little bit weak too, and so I might be looking for some short opportunities next week. Post those in our forum if anything sort of pops out at me. So that's it. Have a great rest of the weekend. What's left of it, everybody. Check out my book on Amazon if you haven't already, How to Swing Trade by Brian Pezim. And if you have read the book and haven't written a review yet, I'd appreciate it. If you did, thanks. Have a great rest of the night, and we will see you in the day trading room in the morning. Bye, everyone.